Alright guys, so day X is coming. The bond crisis is getting worse. Now we have been covering this meltdown over the last week, but it's now reaching emergency levels. The market doesn't believe in the US economy anymore. Investors just don't believe Trump can make things work and the economy is beginning to disintegrate. Now the dream team can go for all their media tours and sellers to the high heavens, but they aren't even doing it right. And here's why the bond market is melting down, because the Treasury Secretary himself can't even admit that the Moody's downgrade is very, very significant.
And if we go back to your initial question on the Moody's downgrade, who cares? Qatar doesn't, Saudi doesn't, UAE doesn't. They're all pushing money in. They've made 10-year investment plans. So this administration, we're doing peace deals, trade deals, and tax deals.
Now this is crazy. Firstly, no one knows whether these deals will pan out. It's just a promise, and if the US economy collapses, I bet a ton of those are going to evaporate. And secondly, the entire US bond market is built on faith and trust. If Besson dismisses it just like this, will the US one day default on their obligations? Now, every time the debt ceiling has been raised, the national debt has been rising as well. We are well past $36 trillion today, and there's simply no reverse gear. If you think the last decade was bad, Trump's trade war and his tax bill will supercharge everything. Now, when you decide to lower the tax burden on companies, someone out there absolutely has to pay for it. Reshoring is a very expensive exercise. To compete with China and other manufacturing hubs, Trump is willing to pump up the deficit, and that might be the only way to bring companies back to the US. But corporations are just one side of the coin. Trump also wants to cut taxes on many workers, allowing them to bring home more money to spend in the US economy. And that sounds great, but in this tariff war, more money will be blown on import taxes. Walmart has already confirmed they will be passing costs down to consumers. So would this even work? Now the White House claims the tax cuts will mean an extra $5,000 in people's pockets. Those earning between 30 grand to 80 grand will pay 15% less in taxes. However, revenues from the tariffs won't pay for it. Exporters are not going to cut into their margins, so this burden will be thrown on top of the national debt. Is it any wonder why Moody's and the other ratings agencies downgraded the US? They simply had no choice. The path to fiscal stability is gone. There's no spending discipline left in the administration. Now, yields today have officially crossed the Rubicon. The 10-year yield is now above 4.5%, the 30-year is at 5%, and the 2-year cracked the 4% level. This shouldn't be a surprise. When you decide to increase the deficit to insanely high levels, investors will demand a higher compensation. They need a higher return to justify all the risks. And as yields go up, the pressure on the US economy also rises. Every borrowing cost in the country flies up, and it makes life even more unbearable. Prices are really going to fly up just due to the tariff war alone. The last thing people need are their adjustable rate mortgages hitting up. And for people looking to take more loans, it's even less likely for them to spend in the economy. But delusion is still extremely high in the administration. According to Hassett, he still insists that the US debt is the safest bet in the world. Well, obviously he has to say that or the entire market will implode. But his reasoning is also bizarre. We are cutting spending, we are deregulating, we got supply side growth, and hence we are going to have the best economy on earth. Now there are so many ways we can challenge this. Even if you cut spending, which is a long shot, higher yields just compound the debt problem. Deregulation is a very mixed bag. Now the ideas for US banks to lend money to the greater economy, that sounds great. But if rates continue to stay high, will people borrow? It's the classic chicken and the egg dilemma. Is the downgrade significant? Now, in my opinion, it definitely is. It shines a spotlight on the effects of rising debt. It's not just painful to bondholders, it also damages the economy. It drags down long-term growth for that short-term fix. At the current trajectory, the debt levels will drag GDP growth down. By 2035, we are looking at $340 billion loss, or 1.1% of GDP gone. By 2055, it will get even worse. Over $1 trillion will vanish, equating to 3.5% of GDP. And if this continues, We will eventually reach 10% of GDP given enough time. As the debt level rises, a larger share of the federal budget is spent in interest payments, so reinvestment back into the US will be quite impossible. Meanwhile, this borrowing will compete with private companies for a limited amount of savings in the economy. So yields continue to stay stubbornly high, and this will create a serious drag. Real businesses who want to expand simply can't. So as a bond investor, does this sound like an awesome environment to put your money in? We might be on the brink of a late stage debt spiral where the only solution left is to devalue the currency. And investors know that they are facing four risks buying US bonds, and these risks are all self reinforcing. As bond yields rise, all of them together could rise as well. Now, firstly, we have a collapse in real value. Besson has admitted he's willing to run the economy hot. So, if inflation is close to the yield or even exceeds it, there goes your return. Secondly, the dollar could always crash against other currencies. A falling demand for bonds means a plunging demand for US currency, and this makes it unattractive for global investors. The value of the bond might crash in absolute terms as well. And if you bought a 10-year at a 4% yield and it rises to 5%, you have lost money if you decide to sell. You're stuck with a hot potato. And all these feed into the risk of a US sovereign default. As long as the Fed steps in to print money, the US is still defaulting through inflation. It doesn't need to be a non payment technical default. And is there a way to reverse this mess? There is, but it will revolve around getting real with the US trade situation. Now, investors everywhere, they want to see a turnaround and restore some confidence in this shattered economy, in this broken economy. But are we really getting an admission of failure from the White House? No, we are not. It's the same old script.
The president posted that Walmart should eat the tariffs and not charge the value customer anything. I'll be watching, and so will your customers. So does he acknowledge that if companies don't absorb the full cost, Americans will have to pay?
Well, first of all, the CEO of Walmart made those comments about the tariffs on an earnings call where CEOs, I believe, are legally obligated to give the most dire warnings and forecasts to their investors and stakeholders. The reality is, as the president has always maintained, Chinese producers will be absorbing the cost of these tariffs. And that is why China was so quick to hustle to the negotiating table with the United States of America. They need our markets, they need our consumers. And I would again point you to the inflation report that came out last week showing that inflation is declining.
Once again, is this crazy idea that exporters will be paying the tariffs, that China, Canada, Europe, and every other country out there will subsidize the US. However, is that really realistic? Well, it's not. We have counter tariffs that are hammering down on foreign demand for US goods, while domestic consumers are being squeezed dry. The downgrade today is very different from the previous one in 2011. Back then, US bonds actually rose in value as their bond yields dropped. Investors piled into treasuries because the system was more or less still intact. But Trump's trade war threatens to flip the entire world order. And that's why the current downgrade reversed everything. US bond yields kept going higher. And what's the point of holding US paper when either inflation will stay sticky or a tsunami of spending is coming? Investors are hanging back and they're demanding a higher premium for their money. So it's important to realize the distinction here. This downgrade is coming at a very bad time. The bonfire just got bigger, and of course, Trump just got angry as well. But let's talk about the biggest front on the economic war, and that's the battle for chips. The US is doing all they can to contain China's progress. Now, the first was the Middle Eastern deals to spread US tech around the world and to get countries and companies hooked on it. But the administration went too far, and China, they are about to retaliate. Now, Beijing has warned that the global threat on Huawei chips will not go unanswered. The US has to honor the consensus reached in Geneva, and if they don't, China will take the necessary measures to hit back. As part of the trade negotiations, China U-turned their export controls of critical metals to the US. Now, these are essential inputs needed for the US supply chain. It actually allows Trump to shift production of chips from Taiwan and Korea to the US. And in a way, you can say that China reversing the ban is actually helping Trump's reshoring plan. Then again, this is free trade, but trying to tell the world not to use Huawei chips is a bridge too far. Now, China's rare earth production is no joke, and they can swing the markets in a blink of an eye. Even today, they account for 69% of global supply. Other countries like Nigeria and Thailand, they also have close Chinese ties. In addition to that, the majority of rare earth refineries are located within China and their partners. Getting the resource out of the ground simply isn't enough. You have to process it. In contrast, the US virtually has zero processing ability for the metals. Without Chinese supply, imagine the insanity of making chips in the US. The US will have to beat up the remaining 31% of global production. Basic supply and demand here. When you have more money chasing fewer goods, prices will fly to the moon. It isn't that complex at all. While it's true that the US has some stockpiles of rare earths tucked away, that won't last for long, especially when Trump wants to ramp up his semiconductor sector. Now, suddenly, the majority of high-tech industries in the US will have high input costs. Lutnick might want to ban Chinese chips, but is the world ready for more expensive chips from an American factory? Now, magnets account for a quarter of rare earths consumption, and magnets are widely needed for chip making. Throughout the various stages from etching to making the wafers, you need magnets, not just for chips, oil refining, EV batteries, and metallurgy. All these require rare earths as well. If China twists the screws, many US industries will get impacted. Here's the problem with supply chains. Besides just paying more for stuff, there's a time delay to the deals. You need to sit down with people and you have to agree to terms. Even after all that, the shipping could take months to arrange. So the US will be left with a big black hole to fill. And one look at this chart and you can tell how big, how massive the scale of the problem is. 80% of US rare earth supply comes from China. Beijing might just take that away in retaliation. Then we have Trump, Bassett, and Lutnick scrambling to meet President Xi. Sure, the White House can attempt to sign new deals, but let's have a realistic projection of how fast they can replace 80% of missing supply. We have procurement talks that could last for months. Even if we fast track that, it will take 3 months at a minimum. The biggest bottleneck comes from realigning supply chains to ship to the US. Now, shifting logistics takes a ton of time. This isn't Star Trek. It might take half a year or more. And if Trump insists on refining the rare earths in the US, we can add on a couple of years. Imagine the regulation nightmare just to build a plant in the US. So in the best case scenario, we are looking at 12 to 18 months. That's if all the suppliers bow down to the US and make things move. But in a global trade war, is this more likely or less likely? You can see how severe a Chinese ban can get. There are no shortcuts here. It's not like a financial sanction where you can just reverse everything with a push of the button. It's not possible. So hopefully the US reverses their chip war with Beijing, or things could get really nasty. It won't go exactly as Lutnick plans. But let me know what you think. Will US bonds continue to sell off? And how will China retaliate against the global warning on Huawei chips? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.